welcome everybody to the live stream for the Monday pre-open. I hope you're ready for an exciting week of earnings because I know I am. And it's just getting hot in here, guys. Do we have some bulls coming back in? Well, it looks like we do. And it seems like the tides are turning in terms of what most people's expectations are. Basically, people think that the bears are over and the bulls are back in, but are they? Well, we'll be hopefully answering that through today's video. As always, we'll cover off on what's going on in the indices around the world. We'll cover the metals, we'll cover crypto, and then we'll get stuck into a few stocks as well and some viewer requests. I think the most interesting chart probably moving forward this week could be gold. Gold having a massive breakout in the previous week, and I think that this is where things will start to change. So certainly a chart we'll be looking at. $77 starting off the stream very nicely. Thank you very much, man, for the coffee. $4 super sticker. Appreciate it, Sandollar. As always, great support. Thank you very much. So welcome, everyone. Let's begin by doing some analysis of the S&P 500. Let's talk about what's leading in here and what we've learned so far over the last couple of weeks. First thing was the defended zone. It doesn't seem like, well, it seems like an eon ago we were discussing this level, but it really wasn't that long ago. We were at the 37.40, 37.50. Now, everything really revolves around this moving forward, especially where the bears get full control of this market. Remember, if the market does drop under this price, it's defended for a reason. And if that does happen, I suspect that we're moving towards that 3,500. Remember, down here, we have the 200 moving average. But let's look at the more like the most recent price. Let's just think about logically what's going on here. We've got a movement up. We've got a movement down. We've effectively got a bunch of rejections off that price, and we've breached past resistance 1, resistance 2, and we're currently past that point. Now, if you were thinking about just standard technicals and taking this as a bit of a distance and saying, okay, well, that's where we were before. What if we took this range? Where would that project us into? You'll notice it kind of takes us to around that 41.50, 41.40 zone. So back into effectively the coil that started all of this collapse previously. This type of market is a very interesting one because you'll notice I've got a level at 39.20. This probably is going to be a fairly large zone for day traders, for scalpers moving forward. We'll get into that chart just very soon, but yeah, these are the key things. If you're looking at it on the surface, you're thinking, okay, bulls are back. We get a new high. We kind of move towards that 41.10, 41.40 zone. And what do we find here? The 20 moving average weekly. Now, for anyone that doesn't know, we will check it out later. The 20 moving average weekly is probably the most important moving average on the chart. The reason, it's mean reversion. For anyone that doesn't know, if you ever read a report coming out from someone like Goldman or someone like JP Morgan or UBS or any of those other places, you'll notice they always usually include a few indicators and a few concepts. The indicators they generally use, MACD, pretty common. Sometimes RSI, very rarely stochastic, very rarely. Moving averages, certainly there a lot. And there are other, of course, big volume, very well used. There are other indicators as well, but these are some of the ones you read in their reports quite regularly if you've ever got access to those. Bloomberg Terminal, being a private client, having that access. It's always nice to have that access. Sometimes what they say in public and what they say in their reports can be a bit different. Anyway, the 20 moving average is one of the mains, and this will be pivotal moving forward. So it looks like this rally is kind of continuing on here at this stage. We obviously have the big earnings coming through. Some might delight. Maybe that's the catalyst for the rest of this week. And I could kind of see it like this. Markets moving in, ramping into earnings as we suspected, continuing to ramp. Obviously, we're now in the big week of earnings here. We see still a little bit of delight. And what's the catalyst past this point? So we get past this week. And I asked this to the chat. Do we have any bullish catalysts left? Bulls out there, tell me what's going on. Let me know right now. Owoyami? Owoyami, I think. Owoyami. Sorry if I mispronounced your name. Thank you very much for becoming a new member. Welcome to the community. Thank you very much. What do you think about any other bullish kind of movements here. This is what I'm thinking, kind of like this nice ramp. Ideally, hopefully we get a little bit more bullishness. And then we've always got to ask ourselves about catalysts, because we could make a negative and a positive, and maybe we'll ask the chat this. We've got the bull case and we've got the bear case. Right now, in the bear case, or the bull case, would be peak inflation. The bear case could still include inflation, though, because it would say not controlled inflation. So no control. So I think that's the bull and the bear case there. The bull case could also be better than expected earnings and possibly priced in. The bear case would be inverted yield. So here's the problem. Inverted yields, being the 2-year is above the 10-year, shows recession. Recession average, negative 32%, SP 500. And you'd at least expect a 200 MA weekly. So it doesn't matter really what I do here. It's going to be easy to stack the bear case. Or I could stack the bear case with 20 or 30 reasons very quickly. And that's why no one can pick bottoms. Because by the time you're out of a bottom, and what I mean by no one can pick bottoms, it's very difficult statistically to pick bottoms in all of these markets where you know that's the base. It's not that you can't pick the initial movement, not even potentially pick the first 10%. But for you to then believe that's the bottom, very difficult. Let's read the chat here and see what you guys have to say. FOMO fears, earnings. What do you think about if earnings are bad, we tank? Very simple. Yeah, for sure. Negative GDP, no ramp in sight, for sure. Monkeypox. Yeah, I don't think monkeypox is COVID, though. It's not going to shut the economies that way. Does an inversion signal mean coming recession? Yes. And if you have coming recession, inversion, well, that would mean usually on average, the pullback of a market will be negative 32%. Neon saying here, it's not a recession if Yellen says it's not a recession. That's true. So all of these things are obviously, here in each way. I guess another bull case would be, say, not led by land. So at this stage, it doesn't seem to be systemic into land and into housing. I still think housing could go down 20% in most Western nations. And although that sounds insane, and it would certainly push us into a recession, it would not necessarily crash the financial system. Very bizarre stuff. So we're not really here to talk about all of that, but we're here to talk about the technicals. Where are the key levels that we want to be watching for the week ahead? So let's now break it down here and have a look at the 1 hour. So we'll start with this chart because it's probably the most interesting. 1 hour, 2 hour, we have 39.20 pullback, move up, pull back, very nice spring, big movement up, new high, down, down, up. At this stage, I would say more bearishness than anything else is probably present here in the morning coming into the market open. Obviously, a lot of people were feeling bullish, but if you're looking at the switch, it went peak, trough, higher peak, underneath that trough, so a lower trough. Effectively changed some form of trend on these smaller timeframes. And that's going to matter for a lot of traders heading into today's session. We've got people with a gap. So close was around here. We've got the current price, and the current price is headed on back up to potentially grab liquidity. So the most important level for the bulls this week is probably going to be around 39.20. As long as the market holds above 39.20, things like the 3 hour, things like the 4 hour, plus any of those timeframes should remain relatively bullish. So that's going to be a very important point. We're going to want to look at the 39.20 for that reason. If you were putting them side by side, which is very important coming into any Monday, let's do a double screen here. Why is that not showing? Oh, that's all right. We've got it over here anyway. Just load up US 500. I'll load up the SPX. There we go. So if we were to think about it, 39.61 was the previous close. We're trading at 39.76. So pull back down to 39.61 is going to take us to previous little bit of resistance. And probably that's a good level to find out who wants to be committed. I would kind of like, if I was feeling really bullish on this market, I would actually really like a takeout of this low here and then a reversal, move it past this high and pull, and any pullback towards the buy would be very, very technical. And the reason why that would be is you get that initial false break to the downside, freak everybody else out in the Monday, push it up in anticipation of course, the next session, and then pull it back. And then around that zone, you're interested in taking those buys. Frankly, guys, if you're taking in trades into this week, you have to be super careful because these earnings results have big movements on them. I'm going to read out a couple of ranges here so you're all aware of the ranges that are going to happen of some of these big stocks. And let me just, this is implied by options. So as we know, options is pretty important and we need to understand how much risk we're going into. Apple's percentage risk, 5.1%. So I'm going to write these on the screen. AAPL is expected to have a 5.1% movement potential on it. Amazon, this is AMZN. We've got a movement here that is expected to be 7.1% move this week. We have Microsoft. This is another big one coming out this week. 5% move on Microsoft. And then, of course, the other huge one that's coming out, well, other than Meta, is also going to be Shopify, because Shopify has often shown us the American consumer pretty well. So we've got Meta. So, all right, Meta here. Meta is expected 11.8% volatility, and Shopify has got a 13.5% volatility. So these are some pretty big volatile stocks coming through. They also make up considerable percentages of the major indices. I think Apple is over 10% of the Nasdaq. So 10% plus of the Nasdaq. These combined here make up a huge portion of the Nasdaq overall. It's well over 20-30% of it, even more. So if we have like this whole 20-30% plus of the entire market coming out, we have these types of ranges. Basically, it's fair to assume that this week, the S&P 500 could potentially move 4 to 5%. Very fair. That's huge. But it is very possible. So this is the type of volatility. To pick a direction here early on is impossible. A few people were saying, Tom, you're absolutely on the fence leading into this day. Yeah, I have to be. I've just got the key zones that we need to watch. And that's like anything. I think I want to just explain this to a lot of traders out there, people that are beginning to watch our stream for the first time. Welcome. Welcome to the 800 people out there. The key to trading is this: being patient, reacting and not predicting, and finding your edge in certain areas that is replicatable. That's what we teach in our courses. It's what we teach in our private community. It is replication. That's all I care about. Something like probably 85% of the time, I have good educated guesses of areas, and they are guesses based on stats of areas that things could go. But 5% of the time, let's say, or even 10% of the time, you will have a higher statistical chance of picking the right move based on replication. And that's what a trader is looking for. Do you think that someone like Druckenmiller, do you think that someone like Warren Buffett looks at every single day at the market and says, oh, I know what's going up? Well, of course, Warren Buffett doesn't. We all know that. He'll admit it straight away. He just says, I know what's happening in 10 years. But someone like Druckenmiller, he changes like this because he changes based on what he's seeing in the data that's coming through. And he'll admit it. If you ever watched one of his interviews, I think he's a champ in terms of one of the best investors of all time / traders. Makes more money in bear markets and bull markets. I've always been inspired by a lot of the things that he does, and he uses technicals. But let's say we break through the 39.20. Well, then as it pulls back, I'm going to start looking for short potential. And let's say I see something like this happening here around that zone with the available data we have right now. At that point, my stats go higher. It becomes the 5 to 10%. So I know a lot of you are bored by that kind of stuff, but it's super important to understand, and hopefully it makes a lot of sense. Can you do the US 30? Yeah, of course, sure. Scott Robinson says everyone's talking bear, so thinking bull investor. So hoping it goes down some more. Dollar cost average. Just wish odd USD would give me some more buying power. That's right, Scott. Yeah, if you're from Australia, it's going to be very, very tough. That's right. Google on the chart there before, by the way. Someone asked, where's Google? Google was 7.1%. 7.1% in terms of volatility expected. So yeah, this is what you're looking for. As a trader, you care about finding your edge that 5, 10, 15, 20% of the time. That's what you care about. As an investor, investors, it's not that hard. Quality, and many people look for DCA strategies. They're not wrong if they buy quality and they have good risk management. But a trader looks for the edge. And when they find the edge, they have the idea. The rest of the time, hey, they're shooting in the dark a little bit, and therefore they may not choose to trade. So leading into a week like this, if I could say it's bullish or bearish, well, I'd be a soothsayer. I don't know. 99% of the 99.5% of the population don't know, because we actually don't know what the earnings are. We can only summarize that currently the trend is up. Currently the buyers are in. And if certain levels are broken, and they'll only be broken usually because of bad earnings, it starts a cascade effect. And that cascade effect is what you want to be involved in. So it's that reaction, not prediction, that we always talk about. So heading into this morning, it would be fair to say that the gap should be filled, 39.61. Current price is 39.76. You'd think a pullback is in order. Potentially a pickup here. I would prefer to see a new low forms, a movement up, a breach, a pullback, and a grab. That's kind of like a nice scenario. If you're feeling bearish, you just want it underneath 39.20. It's already changed trend on the small time frame towards the downside, so you're probably trying to shorten something like this. That would be a fair scenario. And then you're hoping it gets through 39.20, expecting a pullback from that stage, and then basically just trying to short it down. And that would be due to catalysts from the big stocks failing to do well. Thank you very much, Paul. Appreciate being a new member. Thank you. Thought you were a member, actually, Paul, but welcome back. Welcome back. Okay, so this is very interesting stuff here going on. So a few people are mentioning copper. Well worthwhile paying attention to copper and some other metals. And yes, we'll go through the lead indicators right now. So let's bring up some of the leads that we're watching into this market session. We'll come back to the US 500 soon. Let me just break down a 1 minute here. Just have a look at the current price action. Yeah, so the 1 minute's changed towards slight negativity here. Basically, it's breached underneath, pulled back. It looks to be trying to fill that gap before open. If you're looking at that chart, it's mostly negative into the open. Let's now move over to some of our leads. So we've got copper. People are correctly looking at copper and saying, shouldn't I be paying attention to this chart? Probably. Copper's been in a nosedive, showing us that inflation has most likely peaked. And look, I was slightly early on calling inflation peak. I thought inflation would have peaked in back of May. It did peak basically then. It peaked probably about 15 days later, and we saw that in energy demand going down. Now, I would be pretty clear that the next inflation read should be lower. The market already has reacted to this. So anyone thinking, well, I'm going to go play the inflation trade now, well, look at the destruction that's occurred. So somewhere, actually, copper was predicting this early. So this is why they call it the doctor. It's Dr. Copper, yeah? It predicts things a little bit early. If you think about it, it was falling consistently from April. April, it started dumping. It then broke through the trend line that we discussed. There's the trend line. Breaks through it. Date of breakthrough, 2nd of May. By the 4th and 6th of May, whatever it was, 10th of May, I was convinced that we had peaked on inflation, or we're very damn close to it in the next 3 months. Part of the reason, it's not the only reason, but part of the reason is the metals traders had shown us that they were dumping because they were concerned about growth in the economies. They were concerned about the health of economies. Since that point, copper has absolutely gotten destroyed. And this is symptomatic of demand destruction, which we've discussed many, many times. So basically here we have a resistance on copper. We know that we're at a super important point and everyone's scared of it. So yes, it is fair to probably say that this is an interesting zone to watch. And you'll notice I have a little green box sitting above. You'll see a few green boxes today where I like the idea of it breaching through. I think copper's made the first step. So if we go back to the 2-hour chart, it's made the first step. It's bottomed off. It's come low. It's breached up. It's consolidating. To me, it looks like it wants to go on a run. Where to? Probably 355-ish. Why? Because it had too much of a fall off too quickly. And it looks like on the surface, things are improving. So maybe copper wants to have a little bit of nice bullishness there. Also, China might stimulate their economy. If they do, up goes copper. As we know, China, huge demander of copper, and often it does run. So at this stage, kind of looks good. What do you guys think in the chat? What's the chat think about copper? T Sunshine says, are copper and iron prices dropping due to COVID in China? Yeah, it's a mixture of things. It's demand destruction, it's COVID in China, it's demand from any country, and mostly housing, T Sunshine. Who in China would create, right now, you've got to ask yourself the question, who's going to start building houses in China? Would you go, if you were a property developer, would you be like, hey guys, this is a great time for us to build 17 new tower complexes and sell them for overpriced money? What do you guys think? Remember, people aren't even paying their mortgages there anymore. No one, I looked at the stat survey today, an equal amount of people think the market's going down than up. Do you know how rare that's been in China in property? It's usually like 80% of people are bullish, 20% are bearish. At the moment, it's like everyone's neutral. And it's kind of like maybe, I don't know, a quarter bearish and a quarter bullish. And the rest are just sitting there going, I don't know, question mark. Or I'm scared. I don't want to do anything. So yeah, that's a huge driver on the metals markets. If you watch iron ore, check out this. Most of you spell iron correctly, guys. If you watch iron ore, FEF, have a look at iron ore futures, and I'll show you how pivotal this is. I'm from Australia, so we know something about red dirt. And check out this. I've used this for a long time. Look at this trend line on iron ore. I used it back in November last year. That was pretty good. And we're back here again. So iron ore is collapsing in front of us, just like copper is. But look at where they are. Copper's previous resistance becoming support. Iron ore is trendline. Big ass volume. So very interesting levels here. And by the way, do you guys like us talking about metals and stuff? I know we're here mostly talking about indices. Are you interested in it? Let me know. Always interested in the comments. Paul says, Tom, what's going on with the cattle in Australia? Yeah, I haven't actually heard any updates there. My dad is a farmer, so let's hope that doesn't, for anyone that doesn't know, it's foot and mouth coming into Australia is the concern. I'm not sure if it is around, but that would be disastrous for the entire economy. And it's it'd be really bad. So yeah. Metals here. You guys like the metals? Okay, cool. So yeah, this is a very important trend line. I would watch the iron ore futures if I was you guys right now. You have to watch the two metals, copper, iron. It shows China basically. Yes, it shows the rest of the world, but inadvertently, it often shows Chinese policy and demand on metals. And if that starts to improve, it's probably a decent thing in the economy to say, okay, well, things are improving. We got that spike. We got a massive dump that happened early. Again, similar to copper, look at iron ore. Goes through April, just starts dumping. By the time you hear peak inflation, it's already happened. The market's too fast for you. So you have to have those pre-predictors. That's why in May, I was like, oh yeah, I think this thing's going down. That's why I've been hating on oil consistently for months. I was a little early by maybe 2 weeks, but the thing is that it was pretty consistent. Now we're at key levels. Look at oil here. Destruction. So what makes most sense here? Probably some relief rallies across the metals. Iron ore, trend line. Copper, roll reversal. Oil. Geez, it's right there. Check out the daily. Currently going down. Currently lower highs each time. Breach of those lower highs, day traders should be happy because they could come in and actually pick, maybe not that high, but you know what I mean, pick up some buys into potentially a 112 or maybe something like that. So you've got to be on the watch here. This is a very critical zone for oil. Multiple touches. It breaches. I like to wait for the breach and then try to grab the pullback. That's why I write here, patience, react, don't predict. I could say easily, oh yeah, it's support, guys, bye. I don't say that, by the way. That's pure figure. That's just me being random. Don't go do that. So basically, you could say that. Is it support? Yes. Is there probably demand here? Probably yes. Is there big volume? Certainly, yes. If you buy this, though, have the good risk management. What are you going to need? A stop loss, a plan. How are you going to scale it? What if it hits this level? Are you going to take some off? Possibly. Scale a portion off. If it then comes up, scale a portion off. If it then breaches, possibly even take your portion off and then wait for the pullback and grab the rest of the position. That could be the strategy. So this is a super pivotal point. Let's have a look at the small time frames. Let's jump in here. Let's look at the 5 minute. I know this doesn't seem like it's valid to your stock market plays right now, but it kind of is. If you're trading SPY especially, you're going to need to look at this. So where's a little resistance, a mini resistance supply level? Probably around here, around that 97, 8, oh, many 8s, 97.80, 98 kind of price. If we move past that, probably get a little pullback. Could be some nice buys in here towards putting the pressure on. You get a new high past that point, then you're talking. If you're feeling bearish, where's the zone that you want to see the bears take control of the market? Right here. You want them to kind of push it up, possibly even grab liquidity and dump. And the way you're going to see it is something like this. And then you're going to take the short. So you've just got to, like, if it does take the high out, you've got to be very careful around this zone to how the market then interacts. And once you see that reaction, you're going to have a very good idea of the direction that you're going. And it probably is somewhere around here that's going to be critical in the small time frames. We get the false break to the downside, or what looks like false break right now. Very aggressive buying, or at least semi-aggressive. If we make a new low, guess what, guys? What do you think happens if we make a new low here based on this current chart? All right, Sandola, we'll see if we can. Thanks very much to the 1,050 people coming through here. Appreciate it, guys. If you can give it a thumbs up, if you're enjoying the stream, that'd be good. So I think the right answer here would probably be the market will further tank. And I would say that low gets taken. And the main reason is because think about the structure. We have a false break previously, pulls up, makes a lower high, comes down, goes underneath previous little level, which it formed, makes a new low underneath every one of these areas. So it's not like any stop loss that was put here or any stop loss that was put here is still in the market holding. There's none there. So it's only the stop losses underneath here that are still holding in this market. It then instantly rallies. And if we get like a grab of liquidity in here and that reversal kind of sign, or anything even here just turning, once that makes a new low, I don't think I'd be buying oil. This would be kind of that signal, okay, sell the rallies. Remember what I talked about with the percentage? It changes in these areas. These are the areas that you find and you say, okay, statistically, the storyline is bad. The storyline is this, It looks bad. There's no stop losses left. The market must really want to move down. Let's do Sandollar's request here, and then we'll get into some other lead indicators. So all metals, including oil, as a commodity, are actually sitting on fairly heavy supports. Oil could do something separate, by the way, to iron ore and copper, but these are very important levels. Let's have a look at Pan W. Question here is, what are we looking at? Okay, so just quickly look. Just do a very quick synopsis of this. Market's coming down. Market's rallied. It's pulled back a few times. Took out some liquidity here, but had some nice wick here with the bullish hammer. In general, I would say this is in line with the rest of the market at this stage. And what I mean by that is if the S&P and Nasdaq make bull runs and they go to new highs, this stock should break that high at the same time, and that could actually give this one outperformance, because think about it, it's blue sky above, or I like to call it green sky because the color of money. So much better above there. You have a basing formation, a triple top. A breach of that should signal towards that kind of 560 level. So good luck there. Let's move over to the dollar index, probably the best lead at the moment we have in markets towards cash flow going into the market or going against it. Been following this now for weeks and weeks and weeks. Let's go to the 1 hour chart and have a look. This is posing very good for the bulls. Very good for the bulls. So the market went up, down, up, new high, breach, new low, breach, come back. That's very nice. Great short there. Fantastic. We haven't, you'll notice I've double boxed this area. This is very important to me, 10750. So now we've then distributed and we're looking towards making a new low. It's kind of similar to oil. The market came down, made a new low, rallied, and now it's testing that low. If that low gets taken, what happens here? Well, let me add you in an indicator. Remember we mentioned before the 20 moving average. Let's add that 20 moving average together right now. I think I added 2 of them. That's all right. Oh, we don't want the watermark, guys. If you ever want to put the writing on there on TradingView, by the way, just add watermark. I get asked that a little bit. So there you go. So we make it red. It can be Ferrari red because we're going to get Ferrari on this trade. Is that right? And then let's have a look over here from the daily. What's this going to do if we get a new low? Breach the daily 20. Is that significant? Yes. Why? Long leg doji. What's long leg doji show us? Equilibrium, or in essence, kind of like a bulls and the bears fighting each other and a decision being partially made. So if we get that decision made towards the bear side, where's the next stop for the dollar index? Could this begin even further bullish rallies? Well, you would have to think that the DXY at the moment loves the 20 moving average. It hasn't touched it in a while. Imagine if the US dollar went down to here. What would happen in the stock market traditionally? Money comes out of cash. Where's it going? Bonds, overseas assets. So, let's say emerging markets, developed markets, and then, of course, US equities. Thank you very much, Pauline. Thank you very much. Singapore, $5. I do love Singapore. Been there many times. Great place. Might have to come back, maybe watch some F1 in Singapore. Heard it's pretty good. Marina Bay Sands. Anyone there? Hook me up. Hook me up. I would love that. All right. So we've got here bonds, emerging markets, DM, of course, developed markets, and then we've got US equities. If all of these things get inflows, usually the hedge of the world at the moment, which seems to be like, usually there's 4 hedges. You've got dollar index, CHF, usually in Asia it was JPY and gold. They're your main 4 currency hedges. So what's doing well right now? Brand, terrible. So it's left for these 2 to do the work. And even this isn't doing so well. So basically, it's the almighty US dollar. That's what it is. No one cares anymore. Just, I want US dollars. Fair enough. I love US dollars. They're the best dollars. If you don't think they're the best dollars, then you clearly don't understand economics in terms of the major miners of the world. This is the major. Major is most powerful. I could print so unbelievably with the major and get away with it, which is of course what the Fed has been doing. You could print even more. You will not bust the DXY ever before the euro goes under, or the pound goes under, or some other country goes under. The odd, just to hate on the odd as well. The dollar index cannot be the one that falls first. It would never fall first. Obviously, this one probably would. But yeah, that's a very important aspect here. So at the moment, it looks like DXY is going down into the Monday session. Again, giving you a little bit more of a bullish tinge on the S&P at the moment. Scott M says, dollar index is following Wyckoff. It will make a low and go up. So again, let's scroll down here. It's valid. It's a valid concept. Make a low, breach this level here. And of course, yes, you would be fully fledged in the buy. And that's why whatever you're doing, Scott, like I totally get what you're saying, could be a Wyckoff. The idea of a Wyckoff, max pain, potential spring, pull, consolidation, breach, oh, it's on. Very important level, mostly noise. Mostly noise. So if you're right, you want to see tomorrow, bang, like that. In fact, what you want to see is what happened on the US 500 only a few weeks ago. That's what you want. And guess what? There's nothing wrong with you waiting for that to occur and having the patience to react to it. If it keeps going down, you didn't want to trade it anyway. You were just waiting for the patient reaction. Nothing wrong with it. So the dollar index at the moment looks like it's weakening. You can't really say it's not, doesn't look like that. You don't know this is a Wyckoff yet. If you do, message me, because you can't tell. That's the thing with Wyckoffs. They're easy to spot afterwards. They are easy to theorize in the moment, but really the way a Wyckoff is mostly traded on some executable concept. At that point, you could trade it. You need an executable, basically continuous replication. Thanks very much. Isn't this week typically one of the most bearish weeks? Commonly, don't know. Don't have the stat on it. Not gonna. Someone else might have it. They could bring the stat into it. FOMC is coming out this week as well. So yes, US dollar close to making that low. If it solidifies a daily close down here, I think the chance of the Wyckoff is less, and therefore the chance of the bearishness is more. Do I think that is a great trade to short here, even if it goes underneath? From my risk reward standpoint, no, I think it's crap, but that's not what everybody else is doing. Some people will like to short underneath here or short pullbacks and things like that. Fair enough. All good. I still think that's the most important zone, though. If you want to commit this as a longer term buy, it needs to breach the 107.50. So time frame, look at the daily. I would put it on the chart for the next day. I think it's going to be fairly critical to find how this wants to trade over the next 24 hours. Copper, we've done. Oil, we've done. Gold, let's have a look. Gold. You'll notice two boxes. Don't know why I have that one there, but with the box down here, anyone pick up that level? Anyone get a 1600 gold? Like a 1680, 1690? Put your hands up if you got it in the chat. You're obviously a risk taker. You like to just buy that sup, just buy that dip. Obviously, I could see why. August, historically pretty good month for gold. One of the best. It's hated. Everyone's discounted it. Everyone says gold sucks. I don't blame them. So a few people in the gold. All right, let's have a look here. So what have we seen so far? Basically, we have probably some orders here. We've breached this level, significant. We expect a pullback here. That would be actually good. And a pullback somewhere into the 1700s would be pretty nice. And then hopefully some longs. So I would like to see longs appear somewhere in this zone again. That could be the low for gold. That could be the low. If we continue to see significant moves, especially breaching through 1750 and the right money flow signs, which I will bring up on the channel should we see them, technically the base should be in. And everything else should play out the way that you would hope in terms of a bull case. Remember, everyone hates gold, including the money managers at the moment. They all hate it. They've been shorting. I'm looking for the switch. When you see the switch on the TA and the charts, you can get excited because that's a good time. That's what you want to be seeing. Anyway, breach up, pullback, ideal in here. Somewhere it could be good, nice structure kind of level for being looking at it. If it does happen, that'd be great. And of course, ultimately, bigger, longer term traders are going to be looking for 1750 to get taken, pullbacks, and then looking to long it. This will be a pretty monumental day for gold. It should point this is the low. George says, I started rotating into gold recently. Almost got that bottom thanks to George. Good work, George. You did it all yourself. Don't give me credit, man. I don't want no credit. Remember, you made the decision and you did it. But look, if you had a look at the technicals and you said, well, that makes sense. I like that level. Very nice. Futures plummeting. Whenever I see this comment, I always wonder what chart you're on. I want to know. Okay, Chaz. Futures plummeting. How many points have they gone down? Okay, Chaz. I just want to know. I reckon you're like when I started. Remember, my first trade, other than this is outside of my stock trades, going back a long time ago. I traded on the tick charts, guys. The tick charts. And I remember I was like, every minute during the open, I was like, oh, it's moving so much. It's moving like 0.2%. And I'm like, oh, it's moving so much, guys. It's too fast. It's too fast. Mark says back to VWAP. Yeah, VWAP's cool. Huge drop. I hope it comes down. I wanted to fill this little gap here in the morning. But remember, DXY moving down is technically a good thing. So silver, yeah, silver's struggling. Remember, anyone that trades this, gold, think of it as a currency. This is an easy way of doing gold versus silver. It's a currency, okay? Silver has both real world use and it's a currency to a degree, okay? So this is the problem, this bit. Silver will trade a lot with copper. It will trade a lot with other metals because it is a demand metal that is used in a lot of builds. You can't say gold is because gold is used mostly for jewelry and putting bricks in a warehouse or a bank vault. So realistically, just remember silver's slightly different in its properties. If gold really starts going long though, you watch silver do more percentage. Think of a silver as like Ethereum and gold's BTC. If you want to think about the craziness. When BTC starts doing well, Ethereum often does a higher percentage. It's like the crazy version. But yeah, silver will struggle unless copper also turns around. Let's move into yields. Problems. 3% yield, US 2-year. I'm going to bring up some interest rate yields into the future. Let's just check it out. The lie of the land. December this year, 3.33% expected rate by the Fed. Down from 3.6. Okay, that's not bad. That's not bad, but still quite high. So the market's betting that the Fed will have to not raise as much now to get this inflation under control. April 2023, things have changed a lot in the last 2 weeks. We went from having a 4% yield to a 3.3% yield. Well, that's certainly a big bullish kind of case scenario turnaround. It was bad. That's probably excess, so it makes no sense. This was certainly just false price, but we're back to 3.3%. Now, that's still going to hurt. Remember, Ackman's case is this is what happens with the Fed yield. Basically, it's that flatlining on a big one. The market's kind of predicting this. Like that. Slow drop off, but takes time. Fairly similar. And the market's kind of starting to stabilize it more. Basically showing us that we'll have inflation at a higher than the Fed rate for a longer period of time. And we'll have to have, therefore, higher interest rates for a longer period than time. Watch the yields. It's going to be important. Currently leading into today, US 10-year up 3%, US 2-year up 1.48%. Not necessarily great. Duncan Dave says the Fed doesn't know what they're doing. We need another Paul Volcker. Yeah, well, pretty much. The Fed has obviously shown that they are super behind in all aspects. I don't think I've got it here, but most central banks are completely behind. Finkin79 says, but the 1 minute chart is almost as good as the cup of coffee. I've got to beat that inflation. Yeah, that's right. Sam Bob says, Ackman is short the market. Of course, he wants that. Yeah. Oh, yeah. They've all got, look, every single person that comes out and says those things, they've always got an ulterior motive, of course. The Fed will most likely not be wanting to push rates any higher than 3.5, 4, though. The damage would be severe. So they would probably rather just stagflate the economy. And remember, in the best performing asset during stagflation has been in the history gold. So we'll find out whether that's what we end up into. Remember, gold does do very well during stagflation. So it's another reason why this is an interesting zone for it. Okay, let's move over to a couple other markets. We've got 9 minutes till the market opens here. We'll go back over the Nasdaq, over the S&P and the Dow very, very soon. Let's just have a look at TLT quickly. This is Treasury yields. Notice they have had a nice turnaround. People buying back into these, again, showing that basically they think the top of the rates is in what the market expects, and the Fed's going to raise and the market's going to come down to it in terms of expectations. That's the current thing that we're seeing here in the Treasuries. Pretty strong trade. Anyone that's taken that recently, it's been up a few percent. Not too bad, not too good. Bitcoin weakening into the market. Not sure exactly why Bitcoin's so weak. If anyone knows in the chat, they can let us know. From a technical perspective, pretty sick. It's back on the resistance, becoming support, the daily 20 moving average. I haven't seen any signs of life here in Bitcoin just yet. I mean, you could say, oh, well, there's some rejections here right now. Maybe you want to buy. Hey, yeah, I mean, there's rejections. That's good. Rejections are good. But yeah, you probably need to get past 22,800 to say, okay, that fully fledged looks like a base. Here's a bit of max pain. Now we can go back on the ramp. And that goes across all of the cryptos at the moment. Ethereum, much stronger than Bitcoin, still making a series of higher lows. So the money seems to be on Ethereum over Bitcoin at the moment. Ethereum may be starting to take over. Who knows? Big move. Considering it's holding up. Look at that base. It's holding up. Breach through. Where's the next stop? Is it 2,000? Is it 1,800? Key levels for it. Let's move over to the NAS. This will be pivotal for me on the Nasdaq. Breach through of that trend line. That'll convince me that pullbacks may need to be met by buy demand for a longer period of time. So what I mean by that is If we breach that kind of trend line, maybe the worst is over. Remember, the Nasdaq usually bottoms 4 to 6 months ahead of the SPY. At the moment, the bottom of the Nasdaq was the 16th of June. The SPY was the 16th of June, or the 17th, I guess. So very close, similar bottoms. What you would want to see here is Nasdaq holding against the SPY. Super important level. 13,000. Support, support, resistance, resistance, trend line. Have that one on your charts. Probably worthwhile checking it out. 6 minutes till the open, guys. Current markets are slightly bullish into this open for the Monday. Let's look at the earnings and the beat rates. Beat rates, I think, are about 66%. Where is our earnings? Here it is. So earnings for, oh, that's the wrong one. 1 second, guys. Bring up the right one here. Earnings. There we go. All right. So these are our earnings leading forward. Anything important for today? Probably not so much. Morning here. If you're in those companies, sorry, but really it's a scrub. Mostly a scrub, maybe Logitech. Then we get the big ones. Tuesday, before the open, UPS, Coke, McDonald's, showing us some things. GM, obviously we've got some others here. Then we've got Alphabet, Microsoft, Visa, Enphase, Chipotle, Texas Instruments, and a bunch of other fairly large companies. So it is Tuesday, Wednesday, and Thursday that you are most caring about. This is where you expect the volatility. On average, most of these stocks are expected to range anywhere from 5 to 7%. As we mentioned, Shopify standout, 13% expected volatility based on options. So these days here, picking a market is going to be really just about reacting to the news, seeing the pullbacks after the reaction, and hopefully getting involved in the right trend. Markets closed at 39.60. Let me just quickly bring that back up again. Oh, this is that bad one. 39.61. So we'd like to see the SPY come back down to 39.61, fill the gap, maybe go a little bit lower here in the start of the session, and then ideally make that bullish move. I wouldn't mind at all, remember, for the market to go lower, start to bull, get through, and then actually have a nice ramp. So kind of like a pullback early followed by a ramp. That would be a very common thing that happens on Mondays. Nasdaq, let's look at the small time frames here. Go to 1 hour. Check the Nasdaq out. Similar to the SPY, made a higher high, went down, had a bit of a rally, obviously losing against that rally right now. Seems like there's a little bit of defense through this level. So watch this level possibly in the open here for the Nasdaq. The real one could be down here at 12.2. But we've got 1, 2, 3. Pull back, new low, take it, push up, potential of pullbacks for the rest of the session. Certainly a question mark here. At this stage, small time frame trend is down. New peak, trough. So the bears have theoretical control here on the small time frames. Higher time frames, 1 hour and above, very important level. And more importantly than that, here for the Nasdaq and for the SPY, 39.20. 2 minutes till we open. Thanks so much for joining us, guys. Hope you've been enjoying the stream. What platform am I using? At the moment, we're using TradingView. If you're interested in supporting the channel, if you ever do buy TradingView, click on the link in our description. You can check it out. Bernardo says, Tom, US 2-year rising as the market is up. Wouldn't you say that means bull trap for today? Yeah. I mean, look, small time frame change. Small time frame is down. It is down. As we pointed out, we made a new peak and the small time frame is down. So if I'm looking to go bullish, which ideally I would be, but let's just say because the higher time frames are up, I'm looking for the bearishness to come through and then take these levels. And once that happens, then we can react. What's support level for the Dow? We'll check it out in just a second here. We've got 1 minute till the market opens, guys. It's a pretty stale Monday. Usually I'd be sitting here going all crazy and stuff, but here's the problem. This is one of those weeks where it sounds like it's a cool idea to be trading all the time, but it's going to be a lot of reaction-based trading. And if you want to be involved in the markets all the time, you're going to have to be careful. Dow much stronger. Dow much stronger. So the big company's much stronger. Level for the shorters to come back in might be as low as 31,600. Well, underneath that 31.5, whatever it is. Currently looking much better. Obviously, if these markets drop, though, Dow will drop with it. Here we go. We're about to enter the Monday session. 4 seconds. Here we go. Whew. It's going to be an interesting one. So markets are open. Ding, 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 ding. We're ready to rock. Let's have a look at how everything's opening. We'll check out some of the rotation in only a few minutes as well. We'll load up our platform, Tiger Brokers platform, and check that out. So we've got Square, Apple, Amazon, all opening slightly bullish. Some of the other tech companies opening a little bit negative. SPX 39.67. Almost, it dropped to 65. Small gap, very small now between these two. Again, the current trend, smaller time frames. Get rid of the Dow for a second here. For the SPX and the Nasdaq, the small time frame is down, the larger time frame is up. And what I mean by that is anything that's kind of like that 15-minute, 20-minute, 30-minute time frame seems to be on the downside. But we have strongish levels, 39 kind of 20-ish for the SPY. And kind of very similar to here, 12.3 and this level here, which is the 12.2. And I think 12.2 will correlate well with the SPY at 39.20. Whatever the first reaction is of the market often is not necessarily the real one. As you know, the first hour of trade is retail. What you've got to do as a trader is lower your emotions. No FOMO. No FOMO, guys. Has FOMO ever treated you well? The problem is sometimes it does treat you well. And then you think, yeah, look at me. I can FOMO all over the place. Well, 2 weeks later, you'll hear about it because, of course, your account will have been busted. Let's watch the ES futures here. We'll load them up. Natural gas extremely overbought. The Widowmaker. You're interested in that trade, eh? Bit of a dangerous one. Looks like hypers are down here. So we've got 2 minutes in. Probably a good time for us to go and check out the markets. Let's have a look at the US market. We'll load up here some sectors so we can understand which sectors are doing best here today. Do some percentage changes. So it looks like we've got, let me just make sure. There we go. We've got our refresh. So what have we got in sectors? We'll go industry, percentage, diversified metals, and copper doing the best here today. So the ones that you guys have been looking at, you're not dumbasses out there. You know what's going on. Let's have a look at the heat map here for the percentage of the day. Obviously, I like to look at it over a 10-day as well, so you get a bit of an idea. So here's the 10-day and what's been doing well and what's been doing poorly. Then we go to the 5-day. Obviously, a lot more green here. Interesting. Life science tools doing very well. Then we go to the percentage for today so far. Semiconductors taking a small pullback. Oil and gas doing a little bit better. Again, exploration over here. And the best performers actually coming in from, looks like, the banks and the metals. So banks and the metals. Let's just get rid of the top 30 market cap, go to the top 50 here just so we can load up a little bit more. And again, percentage-wise, lots of red sectors at the moment. Bit of defensives coming through. Defensives, pharma, health, communications. No, not that one. Railroads, these types of sectors. Let's go back over to the charts. 39.75 for the ES. I'm not going to use the ES because it gives us a different price. So we'll use the one we were using, 39.61. So as theorized, short time frames are down here early. Snap still being worked over. I wouldn't mind checking that out. I actually haven't looked at Snap. Let's just look as a community now. I don't understand Snap. Oh, it's back to where it was all those years ago. I remember you, Snap, at $5.70. Yep, $9.82 for this one. Look, I'll say it straight. I've said it straight for a while on Snap. I actually think TikTok just owns. It owns, guys. Every single social media platform should be terrified. I was watching kids and watching people on the plane. I flew on the weekend. I was watching people use TikTok. It was just insane. Their minds were crazy. They were all over the place, just flick, 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 flick. And then they started flicking their phones, just like subconsciously just flicking through everything. And they were obsessed. And they had mostly TikTok open. That's all they were doing, TikToking. Out of their mind, TikToking. Believe me, I didn't see no Snap. Probably shouldn't have either. But it was TikTok, 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 YouTube, TikTok. And yeah, that's the thing about it right now. This is maybe there's a turnaround here, but geez, tell you what, TikTok just smoking them. So market's coming down now, 39.55. Again, not necessarily something to be concerned about. We are hoping for a potential take here early in the morning. Robbie Edna, $2.99 Australian. Thank you very much. Is there advanced TA ATAS and order flow charts? What do you mean, Robbie? Message me in Discord what your question is, and I'll answer it off stream for you. That's all good. I don't understand what Snap is for. Don't worry. There's things you probably don't want it. That's the problem with it. It's interesting. Yeah, Robbie, just message me at Tom in Discord. If you're not in Discord, just join it up and message me for that one. Just say Robbie here, and I'll answer what your question is. TikTok sucks. Kevin says TikTok rots your brain. Look, TikTok, I'm not going to profess I use it. Might set one up for doing some trading stuff on it and going on board. But realistically, yeah, no. Can you go VIX? Yeah, we can check out the VIX. VIX 24.12 up 4.69. 24.12. So kind of going 24 has been the general support, breached through. Now it's pulling back to that 24. So interesting start to the session here. Again, I wouldn't mind seeing the Nasdaq low taken. Take out all of this, push up after that. That would be pretty good. Oh, is there advanced TA past what we're talking about, like money flow and stuff? Yeah, of course, there's extra stuff you can learn. The key with most things, though, is this. Anyone know what that stands for? That would work probably pretty well, unfortunately, Kevin. WhatsApp, I definitely get. Keep it simple, stupid. That's right. Or keep it simple, smart, or whatever people want to say it is now. But yeah, I'm going to call it ever stupid. Yeah, stupid. Keep it simple, stupid. That's what we want to do. And we're all a bit dumb sometimes out there. So the best way we can do it is we get our monkey ape minds and we say, okay, we can handle a certain amount of inputs. And this can be put back to TikTok. TikTok potentially, and any of these services, could potentially be ruining our minds. The reason? Stimulus. Too many stimuli. We don't know what's going on. Everyone's too busy nowadays. Yeah, we're all too busy. We all have no time. Yet we actually do have time. We just don't realize we do. So the big thing with trading is inputs. If you can handle, let's say, 14 separate inputs to make a trade decision, good. Otherwise, you're going to create a lot of bias. So there might be a certain amount of inputs you can handle. Maybe it's 8. If it's 8, if you want to bring a new one in, guess what? Go to kick one to keep it at 8. So is the new one better than the old one? With advanced TA, that is going past just the charts, you can do it, but you need something that gives you edge. If it doesn't give you consistent edge, it's not one of your inputs. Always ask yourself the question, can I get extra edge with this? And if you don't feel like you're getting edge, don't do it. All right, come on, Naz, get a new low. I know that seems weird to want a new low, but it's still consistent. Probably this is the more important level for the Nas, and obviously we know around that 39.30, 39.20 is important for the S&P. Joe says, Tom, I have been hearing a lot about Tesla returning to 500. Do you think so? Well, for Tesla return to 500, you're probably going to require the market actually drop significantly. Look, it's an argument all the time. Is Tesla worth its share price? I'm not going to even bother getting into the argument. Many of you would know I own Tesla, and it's okay. I would have liked a new low here, by the way. It's a bit upsetting. But yeah, I mean, it's possible. 500 is very possible. Even 200. I think if you hit a 500 again, you might even go much lower. It really depends if someone like Apple comes into the car game and starts caning them. I can tell you one thing. Based on my personal experience of using the auto driving assist in the cars, my personal experience, I know there's Tesla fans out there, it's not ready. It is not even close. I was driving the car and the thing almost killed us with its phantom braking. It just went psh. And I was like, oh my God, what's in front of me? Nothing. Nothing was in front of us. The phantom braking is real, guys. And to say that that's going to be, I mean, that needs fixing. Tom, would you want an Apple car? Well, I've said I probably would try out that. I think Apple would do pretty well, or at least these social media giants would be doing pretty well in cars. The cars are not really cars anymore. They're just giant entertainment vehicles. Adrian's done it well here, says there's room for improvement, how Elon would put it. Yeah, it was pretty terrifying. I had no idea what was going on. I heard about the phantom braking. I just never experienced it. And then I experienced it and I was like, whoa. I turned that right off. And you know what? I prefer driving it anyway. I like it a lot though. I can't see myself not owning an electric car in the future. So we're getting a nice big pickup here, which is pretty strong looking. It would be, I mean, it's a good zone. I mean, it's in a box. I did want a new low just because I think that's the ultimate trap. But still, even if this happens and we get that nice rally and we push a new high here, then pullbacks through the rest of the day should be met with buy demand. So again, it's not really so much that I mean, if you bought this level, cool. If you missed it, that's fine as well. I mean, you're looking for these types of technical kind of setups, so you have that patience to then react. I still would rather, though, it took at the low. Michael, 500 yen. Thank you very much, Michael. Hey, Tom, could you have a look at the US dollar yen and the odd yen? Thank you, sir. Maybe we can. The yen is super crazy right now. For anyone that's not aware, take a look at the Japanese bond market. It's pretty insane. We'll scroll over here and we'll look up US dollar yen for you, sir. Do that now. 136. So it's coming down a little, almost broke them. I heard that the break level somewhere around 142. So basically, if anyone doesn't know, the yen or Japan is trying to stop inflation. So they're basically printing and devaluing their own currency to try and stop inflation. Now you'll see the big volumes that are coming through. A lot of bets each way, a lot of transactions. Scroll down to the smaller time frames. No change of trend to the downside yet on the big time frame, like a daily. For that to happen, you're probably going to want to take out these lows here. And then you can start to say, okay, maybe we've seen the peak. So at this stage, still very intact, trend line intact. Everything's intact towards putting more pressure on the yen, even as the US dollar is weakening here a little bit. By the way, start of this session so far, US dollar still weakening. Let's take a look at this time frame, 2 hour. So 2 hour has changed trend, did so here. Rallies could be met, big level around this level. So this is where I think you'll still see buyers and sellers kind of recommitting to their positions. So at the moment, if you're trading US dollar yen, you'd be saying, okay, any pullbacks here on the small time frames, I'm looking for reasons to take shorts into this level here. That's what I would be theorizing on this chart. Let's take a look at odd yen just really quickly. Currency is a good option as well for a lot of people this week. Gold, currency, staying away from the stock market to a degree may keep you from having a heart attack during all of these wild earning swings. Odd yen, more of a kind of stuck thing. Look at the daily here. Looks like odd is quite strong. If I was guessing, you would think towards the bull side, odd yen is going. Do I like the setup? It's okay. New low was formed here. It's breached to a new high. It's pulled back. It's looking towards possibly weak again, stronger odd. Really nice move here. Actually, that was a good trade. If you got that, I'd probably expect pullback here and potential rally off that pullback. So at this point, I'd expect probably the pullback to be met by a rally at some point on odd yen. So around this zone. Which one would I trade? Probably the US dollar yen. RP $2 to euro. Tom, can you please comment on soybean futures? Okay. Soybean futures are dangerous futures, but they can be traded around certain seasonality. Market's still trying to hold these zones. We've got a little bit of a ramp. Let's have a look at the small time frames here. We'll go to a 1 minute chart. Thank you to the 1,200 people that are joining us as well. Appreciate it. So no real structure or formation in this rally. It was just kind of ram. You have to expect pullbacks, possible consolidation. This would be really nice now if that happened. That'd be the type of trade I'd take if it was there, technically. RP, because that's my personal decision. Let's have a look at soybean futures. Haven't looked at those in quite a while. We'll look at the cash contract here, I guess. Daily. Soybean. Whoa, got fibs. Okay, so they ramped a lot. And obviously everyone got concerned about food shortages. So far, soybeans have come down. Look, when you trade these futures, you need to know when the roll's happening. I would say that at this stage, you don't have a sign that's going bullish just yet. Probably need to breach past 1,400 and then look to, again, the pullbacks. So you'd need to get past here. You've put in a potential max pain. Volume has been consistently high here for a while, it looks like, if that's to be believed. But when you trade soybean futures, you must understand the roll contracts. This is a cash one, but you still have to understand the rolls. You have to look at the forward futures. You need to look at the weather. Yeah, I'm not kidding you. You need to be a weather projector with soybeans. That's how you make money in this market. Not recommended for the faint-hearted. These are psychos. They're very, very difficult to trade without your knowledge of the seasonality of soybeans, the seasonality of the countries that buy them, everything. You need to be a very advanced trader, in my opinion, which is why we don't talk about softs. Softs are super hard. But tip, you have to go look at the cyclical weather to do well in it. Tom, can you have a look at the dollar index? Yeah, we've checked the DXY out a few times. So again, for anyone that's joining us, we've got that 39 kind of 20 zone on the SPY being a pretty critical sup this week. We've found weakness early in the session. You can see here the Nasdaq demand. You can see the previous level here at 12.2. These are zones that we'd like to see bounces come off. Currently, early on, we've had some bounce. We've then had some drop off coming through. I would like to see now a low, like maybe a new test of this, then a new low, then a breach later on the session. And I'd be very happy with that towards the buy side. That would be a great theoretical movement. And if you saw something like this, it would be really sweet. So we'll find out whether that happens. Fentelix with a cool picture of a duck. Or was that a seagull? Not sure. $5. Thank you very much. Thanks for your awesome work. Keep it up. No worries, bro. Thank you very much. Thank you, Fentelex. Mattias says, I think algos just buy tech every morning. Let's have a look at the rotations here. We'll refresh these 5-day percentage change. So they're not buying tech so much today. Yeah. Semiconductors are down. So the strong moves here at the moment have been banks, healthcare, oil, and metals. The strongest sectors, I believe, were the metal sectors. If we go back over to industry, do percentage change for the day, still metals, oil and gas, steel and iron, copper. You guys have been on it. You know, these are the strong ones. Some of the copper miners here doing quite well. 4% plus. Steel and iron. Nice. And it makes sense if you load up some of these things. Again, oh, this is nice. Very similar to what we expected. I'd like to see a new low formed and then breach. That would be very cool, guys. So if we go over and have a look at a iron ore stock, we'll use the Australian BHP. Actually, we'll use Rio as an example. Another Australian iron ore stock, very big one. You'll notice the devastation on this stock recently. Very low. It's been bucking that trend. So it's come back down to pretty much in line where it should be based on iron ore futures. Volume has remained relatively stable and it started structuring. So as you break this down, 1 hour time frame, etc., it started to form a base. 1 touch, 2 touches, max pain, potential here for that rally. So again, yes, I can see why people are moving into iron ore, copper, and some of these metals down in these lows. Thank you very much, Diamond Eye. Yep, absolutely. We do use indicators and explain them in the course for sure. Indicators are cool and they can be used. I just don't use them a lot just to keep things simple on this analysis. Otherwise, my screen could be filled with indicators and all of you would be confused. It's better just to go with the standard. And really, you can do naked charting. You just need to think about it as you're trading the psychology of the market. You're trading the algorithm psychology. Once you understand those two, you've got a good advantage. I like to think of it as TA is very important. Some macro data can be very important as well on the longer time frames, the swing based. And if the VIX is above 20, you got to tighten in your pairs. I like to say if the VIX is above 20, I might stop doing as much swing. If you're getting smashed in swing trading, possibly the better thing is to play day trades and scalps when the VIX is above 20. When the VIX is above 30, you might want to just trade indices. Gold and maybe currencies. Okay? Just top tip. Take it from my action. Your edge will go down in stocks because the volatility stops your TA working in stocks as much. Anoop, thank you very much. Singapore, $5. Hi, Tom, can you please look at Wilmar, F34 and the SGX? Sure, we'll check that out. Then we'll go back to the markets and then we'll probably finish up here. So we've got F34 on the Singapore markets. It is an agricultural milling company, it looks like. Size of this is pretty big, 25 bill. Huh. Let's have a look. Oh, doesn't look too good, does it? Kind of looks like a head and shoulders. There's the left, there's the head, there's the right. Yeah, pretty big neckline area here for this one. Nice congestion occurring. It's been weak for a very long period of time, many, many years. Obviously had the breakout through the pandemic, and it looks like it's trying to take that away. Let's go down to the 1 hour just quickly here. Series of lower highs, probably a trend line going through these highs as well. Yes, there is. Kind of looks like descending. Now, descendings can be traded both ways. So even though you've got a huge sup here and it could go through that, I'd actually be also looking for the breach trade, which is usually more powerful. So a lot of people just trade it normally like this. The better trade is actually the breach. The breach trade can be incredibly slingshotty. And that's probably what you're looking for here. Base for sure. Has the market actually shown buying pressure though? No, not yet. Lower high, lower high, lower high. You need a higher high. So ideally you breach that 420, pull back and then go towards the long. That's just the way I would look at it. Thank you very much for the donation. Can you go over the VIX chart in capitals from Davender? We can go over it, but I'm not sure what you're looking for. VIX still pretty consistent. Current chart shows that when we've gone underneath 24 recently, this 24 level, we have tended to move down to the 20. So far in 2022, that's what it's been. At this stage, I would have no reason to doubt that. We'll move over to the markets here. Again, I would like to see this market still make a new low, ideally, to allow more liquidity into the market and then breach forward. Not sure if that's going to happen later on the session, but it's something I would be patient for. If you're wondering what are good times to trade markets, a 7 to 11 a.m. New York time is very good for the day trader and scalper. Usually you'll get some form of action, kind of like 1 in 2 days, get a really good entry from those types of zones. So market has weakened. This is a demand area. We're in a demand area here for the SPY. For you to feel very confident about the bull case, you're going to need to make a new high here today, past that level, then look towards the pullbacks for buy potential in your technical systems. That's what you're looking for. You want a new high so that what this could be, which is of course left shoulder, head, right shoulder, which is what a lot of people look at it as, gets broken. Once that gets broken, liquidity will enter. So although it's not going to go up like a vertical cliff like this, that's the type of trade you're looking for. Remember, be patient, guys. React, don't predict. Covered a lot of stuff here today. Hopefully enjoy it. And thanks very much as well. We'll have to do a spectacular soon because we are very close. We are very, very close to 100,000 subs. So that's thanks to you guys in the community. I think we're at 99,202. So that's mad. And yeah, thanks so much. Good luck. I do wish each and every one of you the best. This week, I think it's going to be just earnings, reactions. Gold could still be the most interesting, and the metals. Gold, metals, possibly currency. DXY at this stage, weakening still. Not new lows yet, but certainly weakening. Currently on a bit of a trend down as well. You can see here on the 1 minute. So maybe that's something you want to watch. Make sure it consistently holds that trend line down. Could it floor itself soon? Absolutely. So if we look at a 15-minute chart here, you can really see that weakness coming into the DXY. Again, that's better for the NAS, better for the SPY if this does happen. Critical point. Looking at the bonds, we had a look at TLT. We looked at yields. Both yields are up. General bonds, they were probably in line with the market bullishness recently. Sandola says it better than I can. Thank you all that joined the chat today. Please smash the like button and show the support. Appreciate it. And Russell says maybe 100K by next Monday. I can only wish, hey? Yeah, but thanks so much, guys. You have a great rest of the week. We'll be, of course, producing our content heavily this week. I might have a special pre kind of markets or pre and post, and we'll see what we can do. If the volatility starts to spike, I might do another public stream, if necessary. It's not great for the channel necessarily, but because of the stupid algorithm, but at the same time, if it has to be done, it has to be done. So we'll find out how this volatility ends up. And if we do end up getting ballistic 5-6% moves, which could, very much happen. If that happens, we'll be live sometime later on this week. Thanks so much. Catch you for now. Bye.